So what's your word of the day? How do you see today shaping up?
Well, so my word of the day is stable because we're going to get two economic data points that directly feed into the Fed's dual mandate of stable prices and full employment, and that's CPI and jobless claims. And I think what we're going to see is stability out of those numbers, and that's going to help to fuel upside in the market. It's going to drive the narrative that we're going for a soft to no landing scenario with the economy.
All right, so big economic reports coming up today. I want to ask you just about the hurricane, the port strike, some of the other disruptions we've seen. How do you see that impacting economic reports going forward, and also the Fed's decision coming up in November?
Well, I think near term, you're not going to see too much of an impact, at least in the next couple weeks, but you will start to see it as we turn the page into the month of November and we get the look back into October. So, but near term, I think we're going to start to get earnings season numbers that are going to be better than expected. The bar has been lowered significantly. And I think that's what investors are going to focus on. And I think what you have seen from the marketplace is that they have become much more sensitive to any sort of economic or data point that supports that soft landing to no landing scenario. And I expect that to come into fruition with earnings season.
All right, so your pick for us today is financials, one of your picks for us. We're just looking at a chart right here. Since the Fed rate cut, financials have actually underperformed. We have big bank earnings coming up. Actually, tomorrow they get started. What are the opportunities you're seeing in financials? Why do you think they've underperformed, and how is earnings season going to impact that area?
Well, I think J.P. Morgan didn't do the sector any favors earlier in September when they said that the net interest income and expense outlook for them in particular was too rosy. I think that maybe shook investors in the space. But what we have seen is earning expectations come down a solid 100 basis points going into this reporting period. So I think with the Fed cutting rates, there is opportunity within this sector. Like you said, there has been weakness in the stock. That's always good going into earnings season. So I do think the money centers are the high quality portion of the sector, but also with interest rates coming down, that gives opportunity for the regionals.
All right. Is there any one stock in the sector in the financials that you think is going to give us a read on not only net interest income? You mentioned J.P. Morgan not doing the sector any favor, but also some of the other areas, capital markets, mergers, things like that.
Yeah, I'm gonna be listening to J.P. Morgan, Wells Fargo, Bank of America in particular on the consumer, because these guys also really have a great touch point on the health of the consumer, and they've been pretty resilient in their commentary about the consumer, and so I think to hear more of that is going to be super positive too. I think hearing about the capital markets from a trading investment banking perspective, seeing that has held up in the in the third quarter is going to be positive, and especially their outlook for the fourth quarter.